Hi, this is John Coumarianos with Mindful Advisory, bringing you a new edition of Driving Returns. What's been driving returns this year, of course, is interest in AI stocks, and that's driven the S&P 500 up 18.9% for the year through August 21st. That's including dividends. That's a very big gain. The bond market's up as well. It's up 3.58%. What does that mean for you if you're in a kind of basic balanced allocation? Well, here's a chart that shows what's going on with your portfolio. Let's say you started the year with a million bucks, 600 grand in stocks or using the S&P 500, and 400 grand in bonds or using the Bloomberg US Aggregate, the main US bond index. That means as of August 21st, your portfolio now consists of a $713,000 stock position and a $414,000 bond position. You might say, well, so what? So stocks have done well. Well, what that means is that you're now 63% invested in stocks and 37% invested in bonds. Now that doesn't sound like a big deal, 3 percentage points off, but if you rebalanced your portfolio today, that would get you down to 60, and you went back to 60-40, that would get you down to $677,000 in stocks and up to $451,000 in bonds. That's where you would be at 60-40 now if you rebalanced. If you're a very disciplined investor, you're rebalancing quarterly, semi-annually, you're probably fine. Don't worry about it. But if you haven't rebalanced at all this year, you may need to now because you have more money exposed to stocks, $713,000 in this example, than you might have, $677,000. And if the market goes down, if the stock market goes down, you'll lose more money as a result of not having rebalanced. Of course, the stock market could keep going up. We're not making any predictions here, certainly not any short-term predictions, but rebalancing is often a good idea. Now, let me add this caveat. Don't take this as personal investment advice, especially if all your money is in a taxable account, because rebalancing will almost certainly cause you to incur taxable gains on which you'll owe tax. So consult with an advisor, consult with a tax professional. If you rebalance, it's almost always best to rebalance in tax advantaged accounts like IRAs and 401ks. But the purpose of this video is to tell you that it's a good time to start looking at your allocation and what it's done and how it might be out of whack for the year. Stocks have had a very big run, especially U.S. stocks. Again, up 18.9% on the S&P 500, including dividends through August 21st. And while the bond market has done well, a good year for the bond market, up 3.58, is nothing like a good year for the stock market. What I've seen, among the many problems I've seen with individual investors who don't work with advisors, who don't work with tax professionals, who just do everything by themselves, is that they forget to rebalance. And all of a sudden they find themselves over their skis, way overexposed to stocks before they've even thought about rebalancing. So it's time to think about that. Again, consult with professionals, consult with a tax advisor, consult with a financial advisor. You don't want to just do this and cause yourself to incur massive taxable gains. So this is John Coumarianos signing off, saying once again, consult with the professional, but it might be time to rebalance. Thank you for watching Driving Returns. John Coumarianos signing off from Mindful Advisory. The number, if you need to call us, is 201-951-3509, and the website is mindfuladvisory.com. Thanks very much.